Over 900 million and still growing. The Indian mobile market is the second largest in the world in terms of users. The growth potential of the market has attracted many overseas companies. And now, the government has further eased investment rules to encourage more overseas money in the sector. The new rules will allow foreign companies to invest up to 100% in Indian telecom firms. Earlier, this limit was restricted to 74%. But this move will primarily benefit those foreign companies that already own majority stake in existing Indian telecom entities and will now look at buying out entire stake of their minority partners for complete business control. Most players in the industry have welcomed the decision, but they don't expect new companies to invest anytime soon.
Problems of the Indian telecom sector have been serious and they've been different. And it has been the government's interpretation of its own policy on certain, obscure areas like refarming and renewal of licenses and so on. And those are the big ticket items which are holding back the sector right now. If I was to make a hierarchy, FDI important, but would probably come number 7 or number 8.
A series of allegations of corruption, heavy debt and rapid policy changes have been some of the issues that have taken the shine off the sector. And they've also hurt the profitability of companies. But experts say that this move could help in addressing some of those issues.
In the last few years, what Indian operators have tended to do is they've tended to borrow quite a lot to invest. So the sector today is very indebted. In fact, the debt levels in the industry are around $30 billion, which is at a level of tolerance where the banking sector is unlikely to lend a lot more. So what this ruling does is it removes one obstacle around investing more. So companies have got that additional option.
Apart from telecoms, the government has also eased foreign direct investment rules in 9 other sectors, including defense and power exchanges. The decision comes at a time when India is desperately seeking foreign money to revive a slowing economy and a depreciating currency. But economists say that these measures won't have any impact in the near term.
There is no immediate impact that you see. These are more the game changers in the medium term. What the government would want to aim is, encourage the stable funding as far as the capital inflows are concerned. Efforts have been on not just to have a quick fix measures in terms of encouraging capital flows, but more importantly, encourage the medium-term sustainable flows. And that is where the foreign direct investment comes in.
Last year, the government announced the first set of big bang reforms that included opening up multi-brand retail for foreign direct investment. But those decisions so far have failed to have any major impact. The big question is, will these second set of reforms be able to change the economic sentiment on the ground?